Good afternoon, students. Last class, we left off at assets, liabilities, and owner equity. And where do we find these? On the balance sheet. So one of the first things you have to do is to know this. Know this chart. Now, we're going to look at a mechanic shop. And we're going to see, we're going to classify, is this an asset? That's the question you're answering at this time. Is this an asset? So we're looking at the car. It's owned by the owner and used for Uber. So what are you looking at though? Car. Is that an asset? Building used to store cars for the mechanic. So what are we looking at though? Building. A broken jack, not used in the business. What are we looking at? The broken jack. Volunteer employees, what are we looking at? Employees. Money owed to the company from cars repairs. What are we looking at? Money owed. Money owed by the company to the electricity company. What are we looking at? Money owed. Tow truck used to pick up cars for repairs. What are we looking at? Tow truck. Money in the account of the owner. What are we looking at? Money in the account. Rent paid in advance for 1 year for the business. What are we looking at? Rent paid in advance. So let's go ahead and look at each one. The car owned by the owner and used for Uber. It's an asset, but not for the mechanic shop. Yes, for Uber, not for the mechanic shop. Building used to store cars for the mechanic. Yes, for the mechanic shop. A broken jack, not used in the business? No, it was an asset, but it's no longer an asset. Volunteer employees? No. Even if they are employees, they are not an asset. Money owed, O-W-E-D, to the company? Yes. This is called accounts receivable. So let's say Jamsey didn't pay the mechanic shop, yet it's called an accounts receivable. Money owed by the company to an electricity company? No. This money owed is a liability. And they owe it to someone. Land that the cars are stored on? Asset? Yes, only if the mechanic shop owns the land. A tow truck used to pick up cars? Yes, if the company owns the tow truck. Money in the account of the owner? Is it a business bank account? Yes. If it's a personal account? No. Rent paid in advance for 1 year for the business? Yes. I said it has a future benefit. Now we're going to look at calculation. Is this an asset? Troy Dean is the owner and operator of Dean Construction. He creates his profit and loss every year, or often every year. At the end of the accounting period, December 31st, 2024, he has assets totaling how much? 700,000, and liabilities totaling 200,000. Using the accounting equation, calculates the Troy owner's equity would be as of December 31st. What is the accounting equation? Assets equal liabilities plus owner's equity. Again, assets equal liabilities plus owner's equity. Go ahead and calculate at this time. So you should have gotten a number at this time. So let's go ahead and look at what is the accounting period. Is it quarterly? Is it monthly? Is it yearly? Go ahead and reread the scenario and tell me if it's quarterly, monthly, or yearly. So let's go ahead and look at the answer. So the accounting equation is assets equal liabilities plus owner's equity. So the asset is how much? 700,000. The liability is how much? 200,000. What is the owner's equity? You're going to plug in the 700,000 under assets, plug in the 200,000 under liabilities, and then you're looking for what? The owner's equity. When you put it into the formula, some of us can clearly see the answer is going to be 500,000. But if you need to do the little additional step, you're just going to take the 700,000 minus the 200,000, and then you get the owner's equity of 500,000. Everyone understands? Calculation. What is the accounting period? Quarterly, monthly, or yearly? When you read the scenario, it says every year. So that would be yearly. Now, we talked a little about calculation. We talked a little bit about classification, and we do some exercises in class. However, here's another set of rules that you need to learn. Assets increase you, debit. Assets decrease you, credit. Liabilities increase you, credit. Liabilities decrease you, debit. Equity increase you, credit. Equity decrease you, debit. Now, one of the easiest way to remember it, you can use an acronym. What's the acronym? ALE. Assets, liabilities, and equity. This is the acronym ALE. And then you can do what? Put all your positives on the top, put all your negatives below. Know that the first one is D, then the next one is C, then the next one is C. So DCC, and you reverse it and you go C, D, D. Clear enough, everyone? So we know how to handle the debits and credits. Later on, we'll talk about what they call dealer. So dealer is something that can be used for every single thing in accounting. Everything falls into what they call that dealer acronym. So when you learn it in your textbooks, this is what you may see in most of your textbooks. But the dealer acronym, it will cover every single section of accounting. Everything must fall into the dealer acronym. So the dealer acronym we'll talk about later, but we're going to look at what is a debit. A debit is called the left side of accounting. A credit is called the right side of accounting. There is no reasoning to this. All you know is it's a debit and it's a credit. There is no why to this. It is just the way it has been from accounting has begun. There has to be a left side and there has to be a right side so it can do what? Balance. So I want everyone to know that. You just have to learn it. So it can balance. There must be a debit and there must be a credit. So again, what do I need you to learn? From right now, you're going to learn ALE. And then later on, we're going to learn about the dealer. So we're going to learn about what they call the dealer. So until next class, thank you for watching. And I will see you in class with some examples, some practice. And I'm hoping that you are watching and learning as you go along. Thank you and have an awesome day.